The underlying business model, Alishia, is in very good shape. Our loans increased by just over 10% and our deposits increased by almost 12% last year. So the underlying commercial lending business and the underlying deposit-taking business is in very good shape. The reason that the bank's profits were slightly down and the group profits a little more down were due to some specific one-off reasons that we do not think are going to be repeated this year. And those were, as you quite rightly say, profit on foreign exchange was down. We have a 45% market share in Mauritius, so we provide a lot of liquidity to the market. And when the rupee strengthened from 31, 32 against the dollar all the way to 26, that position, that long position in foreign currency that we hold was marked down, obviously. It's since come back, so the current rupee US dollar exchange rate is 31. We're running a slightly lower position while still fulfilling our responsibilities. So we think, and judging by the first 2 months' numbers that we've already seen, that we're very firmly back on track with continued loan growth and absence of this strong rupee, because we think it's going to be quite stable from here on in, and our foreign exchange profits have resumed their historical level plus a little bit. So that's working out well. And the other reasons for the decline in our results were we have a small private equity portfolio. It's about $100 million out of our $5 billion of total assets, so you'll see immediately it's 2% of our total assets. But we had a small investment in that we again had to mark down to zero, because in this difficult climate, companies do sometimes go bust. Yeah. So,
and here we're talking about that intercable operation that's based in Reunion Island.
We haven't entirely given up hope with this investment, but we've obviously had to mark it down to zero from a prudence perspective. And then the last thing was that we have associate companies throughout the Indian Ocean, the largest of which is a bank in Reunion Island, which is part of France, and the results there were down quite sharply. And again, we hope that as France begins to get back on track, as Europe begins to get back on track, as Mauritius gets back on track, we hope very much that the results from this particular associate will resume their upward track. It's been a very good business for us. Its share of the retail market in Reunion has gone from 7% to something like 13, approaching 14% over the last 5 years. So whilst it's had a difficult year this last year, its underlying business model is also in very, very good shape.
Mm-hmm. So where you touched on economies getting back on track here, I mean, certainly the market as a whole reacting very positively to the 12 billion rupee stimulus package that was unveiled by the finance minister recently to boost particularly the export and tourism sectors. What anticipated impact are you foreseeing from that endeavour moving forward in terms of the economy, but banks' earnings moving forward?
I think it's important at a time of slower demand in any economy that a government steps into that space and stimulates infrastructure investment. And that's precisely what the Mauritian government has been doing over the past year, over the past 2 years. So there will be a trickle-down effect as new roads are built, new schools, new hospitals, water supply is increased. There is a trickle-down effect, a spillover effect into the private sector economy.
Would this need to happen in conjunction with interest rates moving lower, in your view?
It's helpful that interest rates have moved lower, because one of the most interesting things that's happened over the past year in Mauritius is that the inflation rate has moved from 9% down to 3%. Everybody thought when that happened it would just be a temporary blip and that inflation would move sharply back up to much higher levels. Well, that hasn't happened. Inflation is still nudging along just under 3%. And perhaps people are beginning to think what we're seeing is a secular change, and that inflation, having come down, is more likely than not to stay at this low level. Now, if that is the case, that interest rates are also going to be staying low for quite a long time, and business, instead of relying on the rupee gently depreciating in order to put prices up or make profits, they're going to have to focus on efficiency and customer service quality. Yeah. So I actually think it's this latter phenomenon which is starting to take root, and providing operators, whether they're banks or companies, focus on efficiency and customer service, they'll do just fine in this environment.
Of course, from a bank's perspective, the focus would have to then move beyond just interest income that's earned. And we know that, this is one of the primary reasons Kenyan banks have been pretty resistant to lowering their rates in tandem with the Central Bank of Kenya's. I mean, what position do you see banks and their earnings potential being moving forward? How are you looking to, to offset some of the losses that possibly could filter through from lower interest rates?
I think lower interest rates also have a beneficial impact in that the cost of borrowing money becomes lower. Yes, savers earn a lower return on their savings, but borrowers are paying a lower amount of interest to borrow a given sum of money. And my sense is that we're likely to see private sector capital formation start to get going again. It's taken a little bit of a rest whilst it's been looking around to see what's been going on in the developed world as well as in this part of the world. But my sense is that the combination of the step up in infrastructure spending, the lowering of the repo rate, and banks in Mauritius generally bring down both sides of the balance sheet, their savings rate as well as their lending rates alongside the repo rate. But I think it will be a stimulus to private sector credit growth, and a lot of projects that have been sitting on ice, as it were, or just, we've noticed a lot of deferral of agreed projects whilst companies observe the environment will now get going again. And that has to be a good thing for the economy of Mauritius.
Of course, that's just one mechanism to up the ante in terms of, increasing credit growth, or where the slow pace is contributing to excess levels of liquidity in the market as well. The central bank has gone as far as proposing a cap on just how much commercial banks can hold in government securities to encourage lending. Your reaction to that move?
We would prefer, I think, as a community of banks to see the market operate. However, there are times when the market needs a nudge in the right direction. And I think we prefer to see the Bank of Mauritius moves in this direction, that the cap that it's proposing to place on holdings of Treasury bill, or the increase in the cash reserve ratio from 4.5% earlier this year up to 6% now, is an effort to drain some of this surplus liquidity, and that when credit growth gets going again, it will reverse what we very much hope are just temporary measures to reduce the liquidity overhang in the market.
Some have
so the jury is out is the answer to your question.
Exactly, and with that being the case, I mean, some have criticized and said that, the demand for credit is insufficient, that it will, pose a problem if this is implemented. What level of demand for credit are we looking at?
Credit growth has been slightly in excess of GDP growth over the last 6 months, and I think that we can probably see that trend continue. So if GDP growth is forecast around the 4% level, maybe a touch above, I think it's not unreasonable to see credit growth of 5 or 6 or maybe 7%.